Guys, welcome back to my channel. Today I will be giving you my trading strategy for US30, S&P 500, and most importantly today, US100 or Nasdaq. This strategy works for all of them. Without further ado, let's get into the video.
So basically this is US100, right? And it's an index, it's volatile, so I suggest that you can short-term trade this or intraday trade it. All that being said is that you're exiting the same day that you're entering, or not even holding for a week if you do want to hold. We're going to go out to a daily chart and see how things have been progressing. What have things been doing? And obviously right now we are in a very bullish environment at the moment. Depending on what London gives us though, that's the thing with intraday and short-term trading that you have to consider. Like, what does London give us? So now we're going to move on, find the range. So let's get that back there. So we look for what levels we'll be playing in at the moment. So this has been the lowest low in this moment, so I'm going to notate that this has been the lowest low, right? And this has been the highest high at the moment. Okay, so I'm gonna make these blue so we aren't biased to what's going on. All right, so now we're gonna move down to a 4-hour chart. So we've got our range defined, and this is one of ICT concepts. He says to look at the previous day's high and low so you know what you could possibly be reaching for in intraday trading. So that's what I'm going to notate now. And I'm going to make a notation. You can do this on TradingView. Yesterday's low. Okay, and so now we can go to the 1-hour chart and make her look pretty. So actually, I think I should show you guys an example. Let's rewind time. Let's go back in time from today, right? So today was the 12th, and I'm going to rewind time for you all. Perfect. So this is what we were working with. I usually trade the US session because I am in the US. So by like 6 or 7 a.m. I'm at the charts analyzing. So that's the time that I'm going to fast forward back to. Hope that's okay with you guys. 3, 4, 5. Okay. Yeah, 5. So as you guys know, there's usually a push when London traders or European traders trade. There's an overlap between the US session and the London session. You can go to a economic calendar to see the exact time frames, but usually sometime between 1 a.m., 5 a.m., 2 a.m., 5 a.m., around that bracket, that's when the London traders are in there. So yeah, so this is what I was looking at this morning. Like, let's take this for example. And so I come here and I see that the order flow is relatively bullish at the moment, but what I know to be true is what ICT says. So he says usually highs and lows from yesterday will be targeted, so keep that in mind. Okay, so now looking at this, we have a bit more to work with, I'd say. So I'm gonna notate this down candle, but yes, so I'm just gonna fast forward, and we're gonna go all the way up into New York Open. That's what I like. And okay, yeah, this is what it was looking like, that nasty looking barcode. Let's go to 8. Yeah, so right, so the thing with consolidations, right? So this is a consolidation, and what I was expecting to happen, I was expecting weakness just because looking at all of the looking at all of the indices, Nasdaq was falling behind because this morning S&P was making higher highs. Dow Jones was making higher highs, but Nasdaq was making equal highs. And so I don't use indicators, but I am a believer of divergence, and I do subscribe to that idea that if a particular group of things are supposed to move the exact same and one doesn't, then that means that something is bound to happen. And I also checked the economic calendar, fx.com, and I saw that we had 8 a.m. news, so I knew that there will be a strong volume injection. So what I was waiting for was some type of manipulation or wrong side of a market move to happen, and that usually happens around, you know, anywhere in the morning between 8:30 a.m. 9:30 a.m. like that early in the morning for New York time. That's personally what I believe. So yeah, you can sell. That would be great, you know, once these highs are taken out. I think that would be a good idea. Boom. Yes. So you see this big camel that just happened, right? So the reason this is exactly why I said this. Wait till the highs are taken out, guys. Because you want to know why? That's where the liquidity is. Just imagine for a quick moment that you had placed your sell stop right here. You could have, but think about the people who were buying right here, buying near the high of yesterday's high. Don't do that. If you are a buyer, you wanted to wait to buy from down here. Like it would have been smart to wait to like buy at a low or you know, something like that. That's where you would have wanted to buy if you were a buyer today, or maybe even low, because institutional order flow today is very bearish. I don't even think you should be buying, but you want to buy low if you're going to be a buyer. You want to sell high if you're going to be a seller. So there will usually, if let's say you missed this whole big fat move, right, that happened at 9:30 a.m. Let's say you come here and you see this, right? So usually there will be a retest, and there's usually a retest of the body of the last up candle or the low of the last up candle. So you can place a sell stop here or here. Usually you can be entered in on the spread, because the spread for this is usually like what, 200 to 50 pips. So if you're not pip perfect, don't worry, sweetie, because you'll be entered in anyway. But yeah, so you kind of wait for that retest, and look, to the pip, to the point, we retested, right? And then one thing that I should have done with you guys is define exit. So usually a nice rule of thumb for when you're exiting is to say, okay, well, you also want to consider time of day, like lunchtime, US lunchtime, London lunchtime, and then you also want to consider where people would be exiting or where people would want to buy. So remember earlier how I had these like green the green lines for where people would want to buy later on, like right here in this area. Wait, let me make it solid. So people will probably want to buy again in this area or in this area. You see it's even starting to wick. So these are places that you want to take profits, right? So we go on, we let price go on, and then eventually we do end up retesting the high from earlier, and boom, what are we doing again? We're heading down. So even if you missed this move, there's a retest here. There was a retest and cleaning of these highs up here. So I hope this video was helpful. That's how you can find like smooth intraday trades. But yeah, see, now we're down here where the buy side liquidity would be running those stops. Another thing to keep in mind, even if a level doesn't get returned to, the institutions need to go back up or down to grab liquidity. So that's exactly what happened. So this morning move happened. We retraced back up, retested these same levels over here, and then we smacked right back down, right at what, yesterday's high, the bodies of yesterday's high and the wicks of yesterday's high. So okay, so here's some takeaways. Remember, and I'm going to list them in order. Do your comparative analysis and see how the indices are working together as a whole, like S&P, DJ, Nasdaq. See how they're working all together as a whole. Then you want to do your markups, looking at the institutional order flows, seeing how things are. What did London give you? institutional order flow matters in the long run, but for intraday, you want to be looking at yesterday, you want to be looking at 3 days ago. Keep that in mind. And then you want to consider time of day, like the overlapping sessions, when these sessions have lunch, etc., etc. And what else did we cover in here? Where to enter and where to exit and why. How liquidity shapes all of these things. So I hope these ideas helped you. I hope that you can use them on your own. So the measured moves, like I said, they ran the highs. We ran yesterday's high, and if we exited, which is where I like to exit at. I like to exit where I think other people are gonna buy. I mean, yes, it's still running. You can have your runner running, but me personally, this is what I did. I exited it here. So this is a nice measurable move. Yeah, so I hope this video helped, and I'll talk to you guys next time. Goodbye.